What is MakerDAO? In this video, I will explain what MakerDAO is and what function it serves in the DeFi ecosystem. By the end of this video, you'll understand the purpose of the Maker ecosystem, how the DAI stablecoin remains stable, and what we can do with this open, unbiased, decentralized economy. Welcome to DeFi Now, where we give you the knowledge to thrive in the next generation of finance. I'm Josh Cross, and we've got our DeFi dog, Steve Irwin, here on our Irwin cam. Hey, buddy. If you're new here, welcome, and be sure to click those subscribe and bell buttons, or smash them if that's your style. And lastly, before we jump in, I have to drop a quick disclaimer. As always, the knowledge I share on this channel is only for your own information to use in your own research and is not financial advice. It is up to you to make your own decisions or seek the advice from a licensed financial advisor. Don't give me credit if you make money, and don't blame me if you lose it. You should also know that I do hold Maker tokens. If I really like a project, I'm gonna buy some, and so you should know that I have incentive to help the Maker ecosystem succeed. And fire trucks. Great, now that's out of the way, let's jump in. So I started this YouTube channel called DeFi Now, and I've already made 15 videos, but I've hardly touched on DeFi yet. Well, it's about time. And rather than making a dedicated video on what DeFi is, I'm going to make videos on what I see as the most important DeFi projects and the most underrated and undervalued DeFi projects, what problems DeFi solves, and what we can expect from the DeFi space going forward. The most obvious project to start with is MakerDAO. The reason why is because it replaces central banking and clearly demonstrates the power of blockchain and decentralized finance. Maker is the name of the organization, and DAO stands for Decentralized Autonomous Organization. Now, if you think the financial system is great and it doesn't need radical innovation, then, well, welcome to my channel. And you should watch my video on why we need Bitcoin and how banks are lying to you first. Also, I recommend watching my first video on Ethereum first, as it's key to understanding this one. I'll wait. Alright, well, if you're still here, then well done. You're on top of things and you're ahead of the herd. The first thing to know about MakerDAO is that it is a series of smart contracts or programs running on Ethereum. You can think of it as a decentralized central bank and a stablecoin. The stablecoin is called DAI, and the token that governs it is called Maker. Pretty simple, right? To use this ecosystem, anyone is free to deposit Ethereum or other collateral into a Maker vault, which will generate a DAI loan. Since this is a loan, you must pay interest on it. This interest is called the stability fee, and it must be paid in Maker tokens. If the price of DAI is below $1, the stability fee will increase, incentivizing DAI holders to pay back their loans so those DAI can be burned to lower the supply and bring the price up. If the price of DAI is above $1, the stability fee lowers to incentivize people to take out DAI loans, which will generate more DAI tokens, increasing supply and bringing the price down. This is similar to what central banks do, or at least what they're supposed to do. During a recession, central banks will lower the interest rates on loans they give out, which incentivizes people and businesses to take out loans. They use these loans to build their businesses and stimulate the economy. During economic booms, they raise interest rates, which keeps people from taking on excessive debt and helps minimize bubbles and the pain of extreme market cycles. However, after the financial crash of 2008, the Federal Reserve Bank lowered the interest rates from about 5% to 0.1% to stimulate the economy and bring us out of the Great Recession. But then they kept them low for 6 years before starting to bring them back up. And this is why we had the longest bull run in history. The problem with this is then they only got them back up to about 2.5% before the virus hit, and now we're in another financial crisis. But interest rates are pretty much at zero now. This gives them two options: take interest rates below 0% or print money to stimulate the economy via stimulus packages. We've already seen historic money printing for the stimulus packages, but in the US, we haven't ventured into negative interest rates yet. If you take out a loan with a negative interest rate, you are literally getting paid to take free money. As amazing as this sounds, it's not available for the average person, only to commercial banks and large institutions. We won't get the benefits of negative interest rates, and we hardly get any benefits from stimulus packages. On top of that, central banks print money and inflate the supply to pay for government deficits, to pay for wars, to bail out banks who took on risky bets. And here we have the main problem with a central authority governing monetary policy. They always fail us in the end. So this is why it is so important that we have a decentralized monetary policy. And this is what MakerDAO and DAI create. Like Bitcoin and Ethereum, no one entity owns the MakerDAO ecosystem. No one owns governance of it, and no one entity controls the Maker token. Its primary function is to create a free, stable economy that is open to everyone in the world anytime. And it's working already. This is a mind-bending innovation that incentivizes everyone participating to behave while enabling efficient, decentralized versions of our current infrastructure. Now let's dig into how this works. As I said, MakerDAO is a series of smart contracts like the ones I mentioned in my first Ethereum video. These smart contracts are programs that can store money without any one entity controlling it. Like email, it has permissionless access, so anyone in the world with a little crypto can access financial tools such as lending and savings accounts. To access it, you simply send some of your Ethereum or other collateral into a Maker vault, which will then generate DAI in the form of a loan, and you're off. What is a stablecoin? I'm so glad you asked. One of the common criticisms of this industry is its volatility. It's hard to price goods and services in a currency that can move tens of percents in a day. So a stablecoin is a digital coin that maintains a 1-to-1 ratio with the US dollar or other currency, removing that volatility as long as the dollar's volatility remains low. It's important to note that stablecoins are stable to the dollar, not necessarily stable in value. If the dollar changes in value, these coins change with it. DAI is a digital currency that maintains a value of $1 for one DAI, but unlike the dollar, it is open, universal, unbiased, and can be used by anyone, anytime, anywhere in the world. There are other stablecoins like USD Tether, TrueUSD, or USD Coin, but these are centralized stablecoins. Maker's stablecoin, DAI, is decentralized. The fact that it can maintain its peg to the dollar while being decentralized is an absolutely incredible achievement. The largest stablecoin is USDT or Tether. It is currently valued at over $9 billion, but I would not touch it with a 10-foot pole. Although they claim the Tether tokens are 100% backed and that you can always trade in your USD tokens for dollars in a 1-to-1 ratio, they've never been publicly audited and are most likely operating at a fractional reserve and lending out the rest. This is exactly what traditional banks do, only Tether isn't FDIC insured, so USDT holders have virtually no protection in the case of insolvency. Also, they're in heavy legal battles with the US government, so personally, I won't ever own any Tether. But that doesn't stop millions of people from holding and using USDT because it is already widely adopted, has a strong network effect, is on almost every exchange, it can be transported anywhere in the world, and like every other market in the world, this one is also crazy and irrational. The party just keeps going on until it doesn't. So I'll stick with DAI. Let's say you deposit $150 worth of Ether into a Maker vault as collateral. The most DAI you can get is $100 worth, or 2/3 of your collateral value. So why would you take out a loan where you have to deposit more than what you want to take out? This is an important question, and I've got a few answers for you. The first is liquidity. If you hold ETH tokens, chances are you expect the price will increase over time. But maybe money is tight and you need some cash, but you don't want to sell your ETH, especially since it's a taxable event. You can take out a loan on your ETH just like you can take out a loan on equity on your house or car. Then you pay back the loan to get your ETH back. Even if the price of ETH has skyrocketed since you took the loan, you still pay back the same amount of DAI you borrowed. The second reason you may want to do this is leverage. You can deposit that $150 of ETH, get a loan of 100 DAI, and buy more ETH with it. If you're feeling really risky, you could then take out another loan on the new ETH you bought and get another $60 of DAI. Let's get into why this is risky. I mentioned you have to deposit 150% more than the loan you want to take, but that's not entirely accurate. 150% is the point of liquidation. In the physical world, if you don't pay back your car loan, your car will be repossessed. This is an expensive process that requires the legal system. But with DAI, this is much simpler. If the value of your collateral goes down to 150% of your loan, your collateral is immediately sold off in the open market and you pay a penalty. So it's an incentive to avoid being complacent. So if you want to take a loan of 100 DAI, maybe you want to deposit $300 worth of ETH, and here's why. Since this industry is so volatile, it's a good idea to keep your collateral position well above the liquidation threshold. So if you deposit $300 worth of ETH and take out 100 DAI, you have a 300% collateral, and then ETH would have to drop 50% for you to be liquidated. If it starts to drop, all you have to do is add more ETH to keep your collateral percentage nice and high, and there are services that can do this automatically for you. So what happens when my collateral is liquidated? Great question. When the value of your collateral goes down to 150%, it is removed from the smart contract, sold on the open market for the Maker token, and then the Maker token is burned. That way the value of your collateral is evenly distributed to everyone holding the Maker token. You lower supply, the price of all of them go up. Now before we wrap up this video, let's go over the Maker token. I mentioned that no one entity is in control of the Maker ecosystem. If that's the case, who makes the decisions? Who determines the stability fee? Who determines what can be used as collateral? This is the purpose of the Maker token. Holders of the Maker token vote to decide on what the interest rates are for the DAI loans, and they vote to add new collateral types for DAI loans. One Maker token is one vote. And since the value of DAI remains stable, the Maker token is what appreciates in value as the ecosystem grows. In addition to governance, the Maker token has a couple other uses you should be aware of. The first, as I mentioned, is the interest on the DAI loans, also known as the stability fee. When you take out a DAI loan, you must pay it back in full, and the interest that has been accrued must be paid back in the Maker token. When you pay that interest back, those Maker tokens are burned, removing them from supply. This leads to an increase of value of Maker tokens and benefits all participants equally. The same is true when your loan is liquidated. You'll have to pay back your loan, plus the interest and a 13% penalty. That 13% penalty is incentive to avoid this, but if it happens, that 13% is used to buy Maker tokens on the open market and then burn them, lowering the supply of Maker tokens. Once again, benefiting all Maker holders equally. When MakerDAO was first released, the only collateral that you could use to take out a DAI loan was Ether, hence the name Single Collateral Dai. This was fine and all, but it's nowhere near good enough to replace the banking system. Enter Multi-Collateral Dai. With Multi-Collateral Dai, the options open up. As of now, you can open Maker vaults for 5 different crypto assets, and moving forward, the Maker token holders will vote to add more. If you've watched my other videos, you know that with DeFi, we can tokenize real-world assets such as stocks, bonds, real estate, and loads more. When this happens, we can use them as collateral, and I can't overstate how massive this is. As DeFi grows, it will absolutely replace the current infrastructure. It's open for anyone to use, it's censorship resistant, it's neutral, it's far more efficient, and it eliminates the incredible amount of waste in our economic system. Okay, I know this is a dense video and I'm kind of speaking fast and you may feel like you're being blasted with a fire hose, so let me recap and summarize this. The MakerDAO ecosystem is comprised of the DAI stablecoin, the Maker token, and the collateral. Unlike other stablecoins, DAI is decentralized and maintains its soft peg to the US dollar in a 1-to-1 ratio through game theory. The Maker token is used to maintain the peg to the dollar and is used for voting in the Maker ecosystem. It also appreciates as the ecosystem grows. The stability fee or interest on your DAI loans must be paid in Maker tokens, which are then burned. And the same goes for the liquidation penalty. This lowers the supply of Maker tokens, driving the price up. You must keep your collateral to debt ratio above 150% to avoid forced liquidation and paying the 13% liquidation penalty. This penalty will likely decrease over time as the volatility of collateralized assets decreases. Anyone, anytime, anywhere in the world can deposit collateral into a Maker vault and receive a DAI loan. Right now, there are 5 types of collateral that can be used, but in the future, this will include things like stocks, bonds, real estate, and much more. MakerDAO is a decentralized autonomous organization that replaces central banking with an open, borderless, fair, and neutral system that is the next Lego block in decentralized finance. There's about $650 million locked up in the Maker vaults at the time of recording, and well over $2 billion locked up in the DeFi ecosystem. This is the future of finance, and we are still so early. Congratulations on making it through this video. I know it was a lot, so you deserve a pat on the back for making it through. As with my Ethereum videos, you'll probably have to watch it a few times to really grasp the magnitude of this. If you appreciate the knowledge I've shared, be sure to hit those like, subscribe, and bell buttons to help this channel grow. And I'm sure you have lots of questions, so hit me with them in the comments below or by emailing me at contact@defi-now.com. As always, thank you so much for watching, and I'll see you in the next one. Until then, take care and stay educated.